Hey everybody, it's John King, and it is Tuesday the 24th of March. And as always, I want to keep you updated on changes that are happening by the minute in the mortgage industry right now as we deal with the calamity of the coronavirus outbreak. So what has happened most recently is, as of yesterday, the 23rd, non-qualified mortgages are extinct. Now, we don't know if they're going to come back. For those of you who don't know what a non-qualified mortgage is, hang tight, because after I explain what happened, I'll explain what a non-QM mortgage is. So here's the deal. As of the last 2 weeks, we've seen huge volatility in the mortgage market, and it's because investors don't know if mortgages are safe anymore. Now, long term, they're safe, but in the short term, we've got a lot of people who are out of work, and the economy is struggling right now, and we're going to have challenges with their ability to pay their mortgage. And so that's made regular mortgages, traditional qualified mortgages, very risky in the eyes of investors. Now, add to that non-QM and the attributes that go with non-QM, and the risk is off the charts, and nobody wants to touch those loans. So last week, we started seeing non-QM investors falling by the wayside and saying, we're out of this market for now. We're not sure when we're coming back. We had two major holdouts on Friday that said, nope, we're still in it for the long haul, and that was Angel Oak and Citadel. Now, on Monday, yesterday, the 23rd, Angel Oak and Citadel both said, we're pausing. One of them said we're pausing for 2 weeks. One of them said we're pausing for 4 weeks. And here's the problem. They're not honoring current approvals. One of the investors said anything that has docs out, we will go ahead and fund those. But if docs are not out, we're not closing the deal. So if you have anybody as a realtor who is doing a non-qualified mortgage, that loan is not funding unless they've already signed docs and unless they're with one investor that's willing to close the pipeline that they have of docs out clients. Guys, it is a challenge in the market right now that if you have anybody that's out shopping for non-qualified under a non-qualified mortgage pre-approval, you need to pull them back because there is no liquidity in that market. So now I'm going to transition to what is a non-qualified mortgage, because I know that you guys, some of you are listening to this right now saying, John, I have no idea what you're talking about. So I'm going to give you the 2-minute version of it. You've got to rewind back to the market meltdown in 2008. The Dodd-Frank financial reform bill came out in 2010, 9-10, and it basically said, we're going to figure out what we have to do in order to make sure that this never happens again. Well, here we are, it's happening again. But it's happening for a different reason. It's not melting down because of mortgages, but we still are dealing with similar challenges. So they created what's called a qualified mortgage. So a qualified mortgage is a mortgage that has certain attributes. We verified all of your income using traditional income calculations. Your debt to income ratio is low enough. We have what meets the ability to repay rule, and you have a low enough debt to income ratio, or meaning under 43%, or you have an automated approval through Fannie Mae, Freddie Mac, FHA, VA, in which case you can have a waiver to the qualified mortgage rule and still be considered a qualified mortgage. Why does qualified mortgage matter? Because it gives the lender safe harbor against lawsuits, that the lender did the right thing in doing the mortgage with every intention that the borrower is going to be able to pay the mortgage loan. And so the government expected that when they create this qualified mortgage and said, you get safe harbor that we're not going to sue you later for doing bad loans, that people would only do qualified mortgages. But then the free market comes along, and the free market said, wait a second, there's a huge segment of people over here that can't prove their income or have lower credit scores that can't qualify for Fannie Mae or Freddie Mac. And so let's do bank statement programs to prove their income. Let's bring back stated income. Let's bring back what has been called the investor cash flow program, where as an investor, you could buy or refinance an investment property. And I didn't care at all about your debt to income ratio. I only looked at the rents from the property we were borrowing on compared with the mortgage payment on the property we're borrowing on, and did not care about any of your other debts. So you could be way upside down, be not being able to make any other payments. But if you have good credit, I don't care about the rest of your income. You could have lost your job. I don't care. That's an attribute of a non-qualified mortgage. And that industry blew up and grew and grew and grew because investors were seeking return on investment. Same thing that happened in 2000s to 2007, where investors were doing more and more risky loans, searching for return on investment. That has now come home to roost. I've been telling people over the last couple of years, the mortgage industry has a very, very short memory, and we're doing things again that we should not be doing. The great news is the percentage of the industry that was doing non-qualified mortgage as a percentage of the total volume of loans done was really, really small compared with 20 years ago when it was really, really big, and a lot of the business being done was non-qualified mortgages. So that's a quick primer on what a non-qualified mortgage is. It's people that are not qualified for Fannie Mae and Freddie Mac, FHA, or VA, and it's basically portfolio money. And or some of the jumbo products also were considered non-qualified mortgages, and a lot of jumbo investors have gone out in the last week as well. So a lot of turmoil, a lot of change. Follow my page if you have questions about this kind of stuff. I'll keep you updated, and I'm looking forward to being here to help answer any of your questions. Thanks.